Namaskar, good morning. I am again with you to talk about a good company which has released its results recently, yesterday. V2 Retail Limited. It's a front ranking retail company in apparel and fashion business. It has been growing very fast in the last 2 3 years. One of the fastest growing companies in this retail sector. V2 stands for value and variety. Value and variety, and it has been growing like that since last several years. It's mainly concentrating on Tier 2 and Tier 3 cities rather than Tier 1 cities, where the capital to be invested is less, but the profit element is approximately the same as Tier 1 cities. It has got a small brand equity in wherever it has opened its shops. So, the latest results also reflect that trend. The revenue has grown by 32% year on year in this Q1 from 142.3 crores to 187.8 crores. So 32% growth in revenue from 142 crores to 188 crores. And the 48% growth in quarter on quarter, that is with reference to previous quarter, from 127 crores. The sales growth is led by healthy demand and new stores opening. Number of stores have been opened in the recent past. Now, gross profit has increased from 44.5 crores to 63 crores. 44.5 crores to 63 crores. Gross profit has increased. Gross margins have improved from 31.3 to 33.5%. So, gross margins also have improved. That's important. EBITDA has grown by 29% year on year in Q1 from 15.4 crores to 19.9 crores. From 15.4 crores to 19.4 crores, growth is 29% year on year. EBITDA margins was 10.6%, quite healthy margins. Then profit before tax, if we look at that, it has grown by 29% year on year in this quarter from 13.8 crores in last Q1 to 17.8 crores in this Q1. It has grown. But if you compare it to the previous quarter had a profit before tax of just 3 crores. With reference to that, the growth is 545%. So, year on year, quarter on quarter, healthy growth. Profit after tax has grown by 29% year on year from 8.7 crores to 11.2 crores. Year on year, if you take, it is 29%. But if you compare quarter on quarter, that is with reference to previous quarter had just 3.74 crores, and now the growth is 200% with reference to previous quarter. So, quite healthy growth sequentially and year on year. Now, if you look at the market price, it is 459 right now, and 415 it has grown from 268 year on year. Last year it was 268 around this time, now it is 459. So, growth is something like 71%. So, it is a good compounder. Anything which grows by 35% and above is a good compounder. 100% and above, multi-bagger. Now, the price earning is a healthy 35. For such a fast growing concern, 35 is nothing. Many companies are having 40, 50, 60 also in this sector, especially retail. Face value is 10, volume is 94,000 plus, Therefore, buying, selling is not difficult. So, the price trend indicates that people have a fascination for V2 retail. The company has actually opened 14 stores in the last quarter. In one quarter, 14 new stores. Now the company operates 63 crores spread across 17 states and 57 cities. Total retail area is in excess of 7.26 lakh square feet. 7.26 lakh square feet. So 14 new stores have been opened in one quarter. Assuming that similar growth takes place in the next quarter, also current quarter, the growth will continue approximately at this level. Let us hope so. Now the managing director is Ramchandra Agarwal. What does he say about these results? We are pleased to start this year on a strong note with our robust performance in Q1. Revenues from operations have improved both sequentially as well as with respect to corresponding quarter of last year. The positive trends in retail sector, our focused marketing approach, product improvement, etc. have reflected in a very strong set of numbers. We believe that continuous improvement in technology and processes are important for any organization and to achieve sustained growth. V2 Retail is seeing sustained growth. The company is debt-free. Please note, company is debt-free, a positive point, and also has an investable surplus to fuel the growth momentum and expansion strategy. It is debt-free and has surpluses to fuel further growth. Which means it is something like a growth company. I prefer generally growth companies. As a part of the expansion strategy, the company added 14 new stores in the current quarter, taking the total to 63 stores spread across 17 states. We believe that the momentum should continue in the coming quarters also. The MD says the momentum will continue in the coming quarters also. Focus will be on Tier 2 and Tier 3 cities, where we see large potential. And their experience is that the Indian consumer is evolving with reference to his habits, lifestyle, tastes and preferences. The middle class is going in for fashion, good clothes. Our dedicated team of experts are continuously on job trying to understand the consumer needs through market research and keep churning our product basket as per needs of the consumer. So, V2 Retail is one of the fastest growing concerns in the retail sector and may become the fastest growing actually. It has funds to fuel the growth and it is debt free. If it wants to go for debt also it can go, but it is debt free and has surpluses to invest. So there is no problem. So it is a growth company. Now you decide for yourself whether you would like to invest in a company of this nature. Of course, price earning is 35, but in retail sector 35 is normal. 35, 40, 50, etc. is not, because they are growing very dizzily. The entire FMCG sector and retail sector are like that. So price earning is not a problem. So growth is very good. Now think of that. So I will come before you with another either multi-bagger or a compounder. This sort of the companies are called compounders. They become 100% more in 2 to 3 years. Thanks for listening. Listen at least 2 or 3 times to each video. Then only you will grasp, you will be able to decide straight away. And if you have not already done, please subscribe and tell your friends also to do likewise. Thanks a lot. India should grow. You should grow. All of us should grow. Thank you.